After a wonderful growth surprise to end the week, the focus this week will be growth in the UK and inflation in the US. Good morning and welcome back to Morning Markets here at True Potential. Now, the context for this week was a surprisingly strong jobs print for the month of September in the US. That ended a 5-month streak of subdued prints. So it's very much a context of as you were, where the US economy continues to lead. So if we fast forward to what we expect at the end of this week, it's the GDP data for the UK for the month of August. Now, this data is often lumpy, but what we've seen this year so far for the UK is that all of the growth was mostly experienced in Q1. And that may have been subject to some unseasonably warm weather, which has skewed the data higher. We had the mild weather, we also had lower energy prices compared with winter of 2022-23. So there may be some seasonality effects there, which explain why 3 of the subsequent 4 months, have actually been zero. That is, the UK hasn't really experienced much of a growth impulse from April onwards. So the backdrop is a budget which is looming. However, many of the tax measures there appear to be getting rolled back via leaks in the press that we're reading about anyway. So it's possible that we may experience less of a tax headwind than we thought. So we will have all eyes on the growth data to see if there is an impulse which the Labour government can build on. But before that, we'll have the inflation data for the month of September for the US. Now, this is important because there's actually an ongoing soft landing within US CPI. It's possible that we will see headline CPI fall below 2.5% for the first time since February 21. And core pressures, core CPI may actually decline towards 3%. It may even brush 3% for the first time in almost 3.5 years. So this soft landing for inflation continues. But of course, the narrative from central banks has very much changed from inflation towards growth. So that's why growth data, jobs and/or GDP is very, very important for central banks. So we're likely to see the market move more on the growth data than on the inflation data. So we don't expect much from central banks this week. There's no meeting scheduled, and many of the speeches were delivered last week where the Federal Reserve have prepared the market for another cut next month, but it's likely to be only 25 basis points this time round. The governor of this central bank here, Governor Bailey, did tantalise us with the idea that there may be a larger cut than is expected. Market is priced for 25 basis points. And that should really be positioned on whether the inflation data, which comes next week, is actually a downside surprise. So we'll wait for that for when it comes. So all in, remarkably strong growth data in the US. Market focus in the US will be on inflation this week. But we end the week with the GDP data for the UK. That's all for today. Please join us tomorrow. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.